So in my understanding of price action, what I believe after many, I'm in my 10th year doing this. Okay. I obviously wasn't this good in year 1 and 2. I was dog shit. But now that I've been doing this for around a decade, okay, and watching the indices pretty much every single day, okay, and being taught things, taking, courses, going through PDFs. I mean, I've been a sponge for a long time, okay? What I believe about price, not only is it manipulated, but it's designed to do specific things. It's designed to, let's say, mitigate, for example. And we've gone over this in the past. I'm not going to rehash that. There's multiple videos. One of them is the function of a mitigation. We spent like an hour on that, right? So we know that the market is coded, it's designed, and it's literally the mitigation is a function of price action, right? These are signatures in price. So what I mean is just a simple example. You have these lows, right? You have this high. It's the highest one as far as the bodies go. Okay, and I'll zoom in just to make sure you guys can see it. This is a lower body here. So I'm using these two, really just this one here. So when we swept that and then traded through it, right? We closed above at like 6:45 a.m. All right, I'm not up for that. I don't need to be. We trade back into it when? At 7:30. What was 7:30 this morning? I don't know. It was news. I don't know which one, but it was news. So what is price doing at this particular point? We'll take a look at it. It opens and trades down, but where is it trading into? Right here. Right there. Okay? So anyone who was short, okay, they're on the wrong side. They are off sides, just like in football, basketball, name any sport. They got it in soccer too. Off sides. What happens when you are off sides? You'll get penalized. You'll get a flag on the play, right? And lose yardage or, turnover on whatever. Basically, it's a blunder. When you're offside in the markets, you're basically losing money, okay? When price does this, that to me is a mitigation. That's why I call it a mitigation. I don't call it a breaker. I know a lot of people do. I call it a mitigation because that's its primary function. Again, this is what I believe. Okay? So, if at 7:30 price came down here in order to allow traders you'll never meet and money, or they trade with money you'll never have. I don't say that to be mean. It's just they're the ones that control an ungodly amount of money. They are now allowed to get out of their shorts because they are now offside. Now, with that understanding, right, what is price going to reach for after essentially a mitigation? It's going to reach for a new high or a previous day's high, like Thursday's high is here, or some other shit that might be up there. Now, this is the important part. John, I don't trade dollar. I've never traded dollar index before. Never. But what can we look at? If we can anticipate a potentially higher dollar, what can we look at? We can look at euro shorts. Euro shorts. Right? What would the target be? Well, there's got to be lows or equal lows or low resistant lows. Hello, 106.78. Right there, staring at you in the face. London, dollar went down. Euro went higher, traded above Thursday's high. Price breaks down. Okay, so what do you think is going to happen? Well, you already know what happens, but if we break down, what do you think this becomes? Look up here. Look up there. You got leg one. Price trades into, again, Thursday's high. This is also a higher time frame. We'll look at that in a minute. It's a higher time frame mitigation candle on the daily. We break down. That's leg one. What do you think is coming next? What comes after leg one? Leg two. And that's why these are up here, because I'm basically labeling it like this is leg one. That's leg two. Only I just wanted to keep it up here because it was a little bit cleaner in terms of dressing the chart, rather. And then daily mitigation candle too. Do you have a higher time frame concept? Yep, you got the daily mitigation candle. Does price break down? Yes. It looks like it wants to run for the lows. All right, well, before it goes lower, it's going to do what? It's going to go higher first. So 7:30, the news today, again, I don't even know what the news was. I couldn't tell you if it was CPI, I don't even, interest rates, fucking whatever. I don't even know. I don't even know. Couldn't tell you. I don't care. Price trades up, and as soon as it starts to trade up, because this was a fast fucking candle on a 1 minute time frame. And as soon as I saw that and started to trade off of it, I'm in there. I am in there. I told you I entered at the 731 candle right here. Look at that candle, right? In 1 minute, we gave it, market gave the old whoop-de-whoop. So the next candle, we trade higher. I'm shorting that. I think it was at 28 or something like that. It was right there. Entry short. I take a little bit of draw. 3 pips. So 3 pips of drawdown and like 2 for spread. And then I told you the 678 level was the next target. We hit 75. Now it's back higher. All right. What's the trade you want? This is what makes being a streamer so easy. It's just the same shit over and over again. That's what makes stepping in front of a crowd very easy, or tweeting in the Discord, or I don't even know why I said that. Tweeting on Twitter or posting in the Discord, because I posted in the Discord, I'm short. I didn't say I'm thinking about going short. I said I'm short. So what do you think I'm looking for? Lower pricing. You had a late opportunity at 8 a.m. right there. There's a 5-minute imbalance created right there. Yeah, I got in up here. Who's to say you can't get in a couple points below that to still ride the wave? Gave it to you. Gave it to you. You already know this model. The fucking bank robber model. That's what it is. We're not going to call it that, but anyway, I think the point was I was supposed to be going over algorithmic signatures and price. So let's tie this up, or let's tie this all back together. Dollar should trade higher based on the daily time frame. Old distribution should become new accumulation. Then we can go down into the small time frames and trade small time frame manipulation. Okay? Let's visit the daily on Euro real quick, just so we don't forget that. I want to show you, right here. This down candle here, we traded into that. Or if you don't want to have that whole thing right there, just measure up that level right there. 107.42. So when you go down into the smaller time frames of 15 minute, you understand why this was the high of the day, why this was a phenomenal entry. I'm entering on the wick, right? Boom. Easiest money you'll ever make if you get it right. But anyway, the whole point of me telling you this, okay? Because now we're gonna get even deeper. Because that's not all. It's not just higher time frame functions of mitigation. It's not just that. Because now I want to teach you a little bit more about trade management, and that's why I tweeted what I tweeted. Because now we're going to revisit the indices. I don't know what what are the indices doing. Have you guys been watching it? Are they going higher or lower? So let me tell you. Let me explain how to manage a bad trade. Okay. And this is going to be no different than what we talked about the other day. Inverted imbalances. Inverted imbalances. Right? So let's imagine for a second, because this is what I did. All right. This is what I did. I looked at these lows in here and this one, right? 5124 and 3/4. So I looked at that and I said, that might be a target. I looked at this at 10 a.m. I said, that might be our high. So you know what I'll do? Just before lunch, which we shouldn't have done that, but I'm not flawless. So I'm sure all my exes can agree. Moving on. I'm looking at this like, okay, I'll short that with a stop at this high. I was going to go here, but that's the risk reward is horrendous. At 5140, right? This potential imbalance, the high end of the imbalance, right? Stop up here. It's like a 1 to 1.5, maybe 1 to 2. It wasn't a great RR. But let me tell you how it works, okay? And again, I want to stress the importance of algorithmic signatures, okay? So if we expect an imbalance to be bearish, right? We expect it to be bearish, and it's not, okay? As soon as this candle closes at 1040, right? So I'm short at 32 or maybe 33, or no, it's 32.5. I'm short at 51.32.5, and I get a fucking eggplant candle against me, and I go, oh fuck, this is probably gonna stop me out. But let's watch it. Let's see. If this imbalance, okay, if it was supposed to be bearish, or I thought it was going to be bearish, and it gets absolutely traded through, it's not bearish anymore, right? It's not bearish. Price completely disrespected that. I said, okay, well, I got one more. I got this up candle here. Maybe. It might be my saving grace. Throw me a fucking lifeline, please. Right? Throw me a lifeline, Price. Give me a chance here. And I don't know if Lee Bright's here. I didn't see him today. But a long time ago, and I'll say this once more, I told you guys the market almost always gives you an opportunity to exit at a break even versus holding to a stop loss. Now, here's a caveat. If it runs straight to your stop loss, you can't do anything about that. You got it wrong. You're done. Take the loss and move on. Journal it, move on. In this case, the market comes back and into the imbalance here. And what starts happening here? What starts happening here? The bodies are respecting price. And then 11 is about to start. 11 starts, it trades down. So it gives me a little bit, it gives me like 2.5 points of open profit. I'm out. I'm out. Whoop. Right? Those people, oh, you should just take a trade and walk away. No. No. That's tomfoolery. That's nonsense. That's absolutely absurd because I would have got my face ripped off. It would have ran, well, eventually it would have ran to my stop loss and I would have took a big loss. Well, not a big loss, but I would have took a loss. But instead, I actually squeezed out like 1 or 1.5 points on this. Okay? You have to admit sometimes that you're wrong. You have to take accountability. And admitting you're wrong is hard. That's why my exes aren't in the stream. A lot of people struggle with that. They want to stick to their original idea. What did we talk about the other day? Biases, right? Confirmation bias. Well, John, those are lows. Those are equal lows. Those got to be hit. No, they don't. And price will show you. Price will tip its hand to you. Do you see what I'm saying? It's giving you a nasty up candle saying, I'm not bearish. It's coming back into it and going, look, I'm respecting this imbalance that was created on the way up. And hell, I even traded into a down candle right here. That's not bearish. Especially wicks like that. That's not bearish. So it's best to say, you know what? My idea was wrong. Lunch is coming up. I definitely don't want to sit through that. So let me just get out. And then you get out and you don't bitch about it. You don't go, man, but I didn't make any money. Yeah, but then look what happens. I would have taken a loss on the day. No. Inversions, okay? The inverted imbalance can be a signature of price delivery. It can help tell you if price is bullish or bearish. It won't be every imbalance, but certain ones. I say all that to say you don't just take a trade and walk away. That's an easy way to get a loss. If the market shows you its hand, it's giving you a chance to get out. It is a function of price. This is how the markets work. They're designed this way. Most people don't know that. You understand? And all you have to do, and I don't want to make this clip too long, but because we're at 20 minutes already. But listen to me. I want you to think for a second. Think about how many times you were in a trade where it went against you and then it went your direction a little bit and then violently traded against you. But you were hoping because you saw a little bit of blue or you saw the market start to go your way a little bit, you started hoping and praying that, oh man, maybe I am right. I'll just stick to the idea. And then it jammed to your stop loss. And then you went, man, I should have just got out. I don't know why I held it. I had this internal feeling. I had this weird feeling that something's not right. But I stuck to the idea because, I don't know, you wanted to be right. You wanted to make money. You wanted to prove to other people that you know what you're doing. You want to try and hurry up and quit your job. For whatever reason, for whatever justification you had, you held on to a bad trade. This is why we go back and we learn from our mistakes. I've seen this before. I've shorted the wrong imbalance going, okay, well, I hope it goes my way. And then whoop, loss. Felix, why do you think that's happened? And Felix is the only one that's being honest in the chat. I can tell. Thank you, Felix. You're awesome. Gold star for Felix. Everyone else, you're fucking banned. Alex, if it's happened to you 100 times, what does that tell you? That tells you that it is consistent. It's happened to you 100 times. That means it happens over and over and over again. A lot of people look for consistency, but then don't look at the consistency in their losses and invert that. You should rewind that. I won't say it again.